In March 2021, one man erased $20 billion in 48 hours. No war, no fraud exposed overnight, and no global crash, just leverage. His name was Bill Hwang, a quiet Hyundai driving family office manager who turned $200 million into $20 billion, and then watched it vanish in 2 days. This isn't a story about a bad trade. It's a story about secrecy, ego, faith, risk, and the dangerous illusion of control, and what happens when confidence turns into conviction, and conviction turns into catastrophe. Scene 1. The quiet prodigy. Unlike the loud personalities of Wall Street, Bill Hwang preferred obscurity. He lived in suburban New Jersey, drove a modest Hyundai SUV, attended church regularly. Born in South Korea in 1964, Hwang immigrated to the United States in 1982. He was raised by a widowed mother, the son of a pastor. Faith shaped his worldview early. He earned an MBA from Carnegie Mellon, started in sales at securities firms, then, in the 1990s, landed a job that would change everything. He joined Tiger Management, founded by legendary investor Julian Robertson. Robertson was a titan. He turned $8 million into $22 billion. His protégés were known as the Tiger Cubs, elite hedge fund managers who went on to dominate Wall Street. Among them, Hwang stood out. He was aggressive, conviction-driven, and hyper-focused. When Robertson stepped back from an active management in 2000, he gave Hwang capital to start his own fund. That fund was Tiger Asia. Scene 2. The first warning signs. Tiger Asia focused on Asian markets. It grew rapidly, managing billions at its peak. But Hwang's lifestyle was different from his peers. He didn't diversify widely. He concentrated. He borrowed. He believed in going big when he was right. And for years, he was right. Until 2008, the financial crisis exposed weakness in highly leveraged, concentrated bets. Hwang suffered losses. But the real blow came in 2010. US regulators began investigating him for insider trading involving Chinese bank stocks. In 2012, Hwang pleaded guilty. Tiger Asia paid tens of millions in penalties. For most investors, that would have been the end. But this is where the story turns. Reinvention. The birth of Archegos. After closing Tiger Asia, Hwang converted it into a family office. A family office manages only private wealth, not outside investors' money. That distinction matters. Less disclosure, less oversight, more secrecy. He named it Archegos Capital Management. Archegos is Greek, meaning leader or prince. Hwang described it as a Christian values-driven investment vehicle. He donated heavily to faith-based organizations and said his wealth was meant to serve God. He once said, "I like God more than I like money, but markets don't respond to prayer. They respond to risk." And Hwang's strategy was simple. Borrow aggressively, buy heavily, concentrate relentlessly. Scene 4. The weapon. Total return swaps. Here's where the mechanics become crucial. Instead of buying stocks directly, Archegos used total return swaps. A swap allows an investor to gain exposure to a stock's gains or losses without actually owning the stock. The bank buys the shares. The investor posts collateral. If the stock rises, the investor profits. If it falls, the investor pays. The beauty of swaps? Secrecy. Public filings show the bank holding the stock, not the investor behind the swap. Hwang used swaps with multiple major banks, including Goldman Sachs, Morgan Stanley, Credit Suisse, Nomura, UBS, and Deutsche Bank. Each bank saw only its slice of exposure. None saw the full picture. At one point, Archegos controlled positions worth over $100 billion, backed by a fraction of that in actual capital. It was leverage stacked on leverage. And as long as stocks rose, it looked like genius. Scene 5. The illusion of invincibility. Between 2013 and 2020, Hwang turned roughly $200 million into nearly $20 billion. That kind of growth creates something dangerous. Invulnerability. His major bets were concentrated in a handful of stocks, including Viacom CBS, Baidu, and others. One of his largest positions was in Viacom CBS, later renamed Paramount Global. As these stocks climbed, Archegos' returns exploded. Banks competed to lend him more money. Margins loosened. Leverage increased, reportedly to 5 times capital or more. No one wanted to lose him as a client, and that's the paradox of Wall Street. The bigger you get, the easier it becomes to borrow. Until it isn't. Scene 6. The Crack. March 22nd, 2021. Viacom CBS announced a stock offering, issuing new shares. The market reacted instantly. The stock fell over 20%. That decline triggered margin calls. When you trade with borrowed money, falling prices force you to post more collateral. If you can't, your positions get liquidated. Hwang believed the stock would rebound. He held firm, but banks began to panic. This became a high-stakes game of chicken. If they coordinated and unwound slowly, losses could be contained. If even one bank sold aggressively, the price would collapse, forcing everyone else to follow. Scene 7. The Collapse. On March 26, 2021, the dam broke. Goldman Sachs and Morgan Stanley moved first, dumping billions in shares onto the market. Prices plummeted. Other banks were left holding toxic positions. Credit Suisse lost approximately $4.7 billion. Nomura lost around $2 billion. In total, banks lost over $10 billion. And Bill Hwang, he lost $20 billion in 2 days, the fastest personal wealth destruction in modern financial history. Scene 8. Aftermath. Unlike Terence Watanabe, Hwang didn't spiral publicly. He retreated into silence. Regulators began scrutinizing family offices. Lawmakers questioned whether the exemption created after the 2008 financial crisis had gone too far. Family offices globally control trillions in assets, with minimal disclosure requirements. Archegos exposed a structural blind spot. When secrecy meets leverage, systemic risk follows. Scene 9. The deeper lesson. This wasn't gambling in a casino, but psychologically, it wasn't that different. Like Watanabe, Hwang chased conviction. Like many high performers, he believed deeply in his thesis. Like many powerful figures, he assumed he could manage risk. But leverage amplifies everything. If you're right, you look brilliant. If you're wrong, you disappear. Here's the uncomfortable truth. Bill Hwang didn't lose $20 billion because he was stupid. He lost it because success convinced him he was invincible. Wealth can distort perception. The more you win, the less risk feels real, until reality corrects you violently. The mindful millionaire perspective. Bill Hwang built quietly, gave generously, spoke about faith. But markets don't reward intention. They punish imbalance. Archegos wasn't destroyed by one bad stock. It was destroyed by concentration, by opacity, by overconfidence, by the belief that past success guarantees future control. Money magnifies who you already are. If you're disciplined, it expands discipline. If you're reckless, it accelerates recklessness. True wealth isn't about how fast you can grow capital. It's about how well you can survive volatility. Because in markets and in life, it's not the rise that defines you. It's whether you can endure the fall. This is the Mindful Millionaire. And remember, leverage builds empires, but humility preserves them.